Hello, traders. Well, with this holiday season, I haven't really been doing any videos or anything, and uh, and I hope everybody had a really good year on their trading. But I was just gonna mention a little bit about SKEW this week. It's something I try to keep an eye on, to see get an idea of how I'm expecting the market to shape up for the week. And we have been on an amazing tear in this market. Everybody will agree that. But whenever the skew starts, that means the number of out of the money uh, options starts getting exaggerated away from the expected move in the S&Ps. I start getting concerned because we start getting inside weeks and tighter ranges or even reversions to the opposite direction. And what we're seeing this week, how you figure this out, you go to the Friday expiration of this week, and you go to the next at the money uh, uh, calls and puts, and you pull up a straddle. I pulled up the 32.45s. This is the way I normally do it. And the cost for that straddle is 26.95 right now. Well, in toss, they had the expected move printed up in the corner, and this actually takes into effect the skew for the week also, and it's at $32.29. So that suggests about a 5% $5 premium if you add in the skew value for this week. So there's a lot of out of the money options in play this week. An exaggerated amount, in my opinion, coming into the week. So that is a contrarian indicator, in my opinion, that the markets are probably going to have a tight week, maybe even to a downward bias to close the year out. So maybe I'm dead wrong. I just wanted to point that out going to start this trading week. Okay. Now, I'm not even going to bring up that chart, but let's go over to some stocks. Tesla, historically, best week of the year. This is the best week of the year for Tesla. I mean, Tesla's the strongest this week, but it's already done so much. And there was technically an upgrade in Tesla this morning from Cohen, but in my opinion, because the downgrade was still considerably lower than the current price, it's actually a downgrade because they only raised their price target to 210, not from 190. So it was, in my opinion, a significant downgrade in this stock. And I bring Tesla up because it was one of the top ones, the same situation. The skew is just there. And see if you go over here into your straddle, and it's 22.75. That's the expected move. But then once you factor in your skew, there's another 80 cents premium onto Tesla. So that one was one that I wanted to point out here that it is skewed quite a bit here. A lot of out of the money premium. So it may need time to digest, and which I had mentioned in a prior video, or maybe a reversion a little bit lower this week, despite the fact that supposedly it's going to be a strong week for Tesla historically. But I do think a lot of that premium has already been priced into the stock. Now, if we were to get some selling pressure, it is important to note we have not even tested the 405, back tested it yet. And as far as that goes, the 357 VPOCs. So we got 2 weekly VPOCs below us on Tesla that have not even been tested yet. So, and typically when you get a breakout move like this, you do get a weekly back test and then for a continuation higher, and we haven't had either one of those. And I'm not saying it's going to go all the way back down to 360 by no means. Yeah, it's hard to say that, but we are well above the. This is the established trend. We are extremely above that prior trend. So coming right back down to the 405 area. It couldn't, to me, it seems like a distinct possibility. So just keep that one in mind on your Tesla trade. Okay. Netflix. This is another one that I'm keeping on my watch here. Most of last week's value was all down here around the 315 area. Okay, and then it had the short squeeze that blew it up above. And this yellow line right here, this is yearly value that was developed out back in 2018. Okay, so we're basically 2 years in, starting the new year, and we didn't go anywhere as far as value for last year on Netflix, and we're just hovering right here. And we back tested that Friday and rallied slightly above. And so just keep that in mind. This is that 2019 value on Netflix. I am extremely bullish on Netflix, and mainly for their global expansion efforts. So that's my opinion on Netflix. I think as the global economy improves, it's just going to be a major tailwind for Netflix. And they do have some pretty decent content. They had Witcher come out over the weekend, which was all right. They also had the Swiss Family Robinson. What was the name of that? That sci-fi. I'll think of it here in a minute. But at any rate, it came out and it was all right. It was a pretty good show too. So, but I do think the international content, and by them diversifying to international programming, they can get actors at a far lower cost basis, and that's going to continue to significantly drive their earnings performance forward, in my opinion. And you know this last quarter was really great on their earnings per share. And the biggest issue they've got is we got 12 new streaming platforms in the U.S., which I do think it's just the adaptation of a new entertainment environment. It's not necessarily a negative for Netflix. Maybe some people do leave Netflix. They have kids and stuff, and they don't want the mature content, them exposed to that type of atmosphere. But for the most part, I don't think Netflix has much of any big problems facing them going forward here. And there are some things they can do to really start tweaking their revenue stream if they decided to do so. I'm keeping Disney on close watch here because I do think what we're doing here, we got this bull flag downtrend line. We are coming into that to today or tomorrow on Disney, potentially getting a see, we got a bid this morning already. So today or tomorrow, we're going to be coming into this downward trend line on Disney, bull flag scenario. I do think the numbers came out like over $1 billion on the Star Wars last movie type thing. I do think this bull flag is setting up for a continuation pattern back to the all-time highs going into their earnings numbers, which are the first week of February. So we still have time, but I do see this as a bull flag continuation. I do think this breakout pattern that has happened here is going to hold and hold strong into the earnings coming in February, as long as the markets hold up. There's no reason not to think it's not going to happen. And another one that I'm looking at here, and that is McDonald's. This downward trend line last week, we broke out above that. Then we came back down and we back tested the backside of that. So that's why most of the value was put in lower for last week. And then we got towards the end of the week, Friday actually, we got a short squeeze, taking her back to the upside. So now we're back testing this. We're starting to back test this breakdown trend line. And once we break past that, yeah, that is quite bullish. Now we do have a new CEO, and that's what's hindering McDonald's. But I do believe McDonald's is a buy candidate, considering all the strength we're hearing out of the U.S. consumer and hearing all about all the strength out of the Chinese consumers. And those are the two biggest by far markets for McDonald's. And so just keep that one in mind. This is uh, a stock that I do think we're going to be coming back up here and check in relatively short order the 205, 210 area on McDonald's setting up here going into their earnings report. And that is the end of January. We're going to be getting that earnings. Okay. And those are the main ones that are just standing out to me. I just mentioned Disney and McDonald's. Those aren't SKEW things, but those are the two of the stocks that I'm really keeping on my watch for this week. And so that's just pretty much all I wanted to say. And good trading. And I will probably see you guys in the new year.